Welcome to HouseLux Estate, your go-to channel for everything real estate. Here, we unravel the intricacies of property investing, offer insight into market trends, and provide tips to maximize your profits. Whether you're a seasoned investor or just starting out, HouseLux Estate is your trusted guide in the vast and exciting world of real estate. Subscribing to our channel guarantees you a front-row seat to this wealth of knowledge. Today, we delve into the captivating world of real estate investing. Now, you might be wondering, why should I invest in real estate? Great question. Let's delve into the myriad reasons this venture could be your key to financial success. Firstly, real estate offers a sense of financial security that other investments might not. Unlike stocks or bonds, real estate is a tangible asset, a piece of the earth that you can see, touch, and utilize. It's a hard asset that has meaningful value. Its physical form is there to stay, and over time, the value of this asset is likely to increase, providing a safety net for your financial future. Secondly, real estate can be a source of passive income. Rental properties, for instance, can generate a steady flow of income that puts money in your pocket without requiring a significant time investment on your part. This passive income can be a significant boost to your financial status, helping you achieve your financial goals faster. Lastly, the potential for capital growth is another compelling reason to invest in real estate. As property values increase over time, so does your wealth. This appreciation can result in significant profits when you decide to sell. Investing in real estate is not just about buying a house. It's about creating a future that is financially secure and that grows in value over time. That said, let's explore how to start your real estate investment journey. Before diving in, it's essential to understand some basics about real estate investing. Let's start with a term you'll hear quite often, ROI, short for return on investment. Think of it as the profit you make from your investment. It's calculated by subtracting the cost of the investment from the gain, then dividing it by the cost of the investment. This gives you a percentage that represents your return. When it comes to real estate, a positive ROI means your property is making more money than it's costing you. That's what we're aiming for. Next, let's touch on property valuation. This is essentially the process of determining the economic value of a real estate property. It can be influenced by a variety of factors such as location, size, condition, and market trends. Accurate property valuation is key to making sound investment decisions. You wouldn't want to pay more than a property is worth, would you? Now, onto the types of real estate investments. There's a variety out there, each with its own set of pros and cons. First, we have rental properties. This is where you buy a property and rent it out to tenants. The rent you collect can cover your mortgage and other expenses, and the property can appreciate over time for an even greater return. Then, there's real estate investment trusts, or REITs. These are companies that own, operate, or finance income-producing real estate. When you invest in a REIT, you're buying shares of that company, much like you would with any other stock on the market. It's a good option if you want to get involved in real estate but don't want to deal with the hands-on aspects of managing a property. And those are just two examples. There's also house flipping, commercial real estate, and even vacation rentals. Each type of investment requires a different level of involvement and comes with its own risks and rewards. Armed with this knowledge, you are now ready to take the first step. Starting your real estate investment journey involves several steps. Just like a puzzle, each piece is vital, and when correctly connected, creates a clear and complete picture. Let's dive right into it. Firstly, you need to identify your investment goals. Are you looking to generate a steady stream of income, or are you more interested in long-term capital growth? This decision will guide your investment strategy and the types of properties you'll target. Next, it's time to research potential properties. This isn't about picking the prettiest house on the block. It's about identifying properties that align with your investment goals. Are you looking for a rental property in a bustling city, a vacation home in a popular tourist spot, or a fixer-upper you can renovate and sell for a profit? Each of these choices has its own set of considerations, like location, market trends, and potential return on investment. Now, let's talk about financing. Unless you're sitting on a pile of cash, chances are you'll need to secure financing to purchase your property. This could be a mortgage from a bank, a loan from a private lender, or even pooling resources with other investors. Your credit score, income, and the amount of money you can put down as a down payment will all factor into this process. It's crucial to understand the terms of your financing, including interest rates and repayment schedules, as this will affect your bottom line. Once you've secured your property, the work isn't over. Now, you're stepping into the role of property manager. This involves maintaining the property, finding and managing tenants, and dealing with any issues that arise. If this sounds like a lot, don't worry. There are property management companies that can handle these tasks for you. However, this is an additional cost you'll need to consider in your investment plan. It's also important to remember that real estate investment isn't a get-rich-quick scheme. It requires patience, diligence, and a willingness to learn. The market fluctuates and there will be highs and lows. But with a clear strategy and a commitment to your goals, you can ride these waves and see a return on your investment over time. Finally, don't forget about taxes. As a real estate investor, you'll need to understand the tax implications of your investments. This might include income tax on rental income, capital gains tax when you sell a property, or property taxes. It's wise to consult with a tax professional to ensure you're meeting your obligations and taking advantage of any potential tax benefits. By following these steps, you can navigate the real estate investment landscape with confidence. Remember, every successful real estate investor started where you are now. With knowledge, planning, and a little bit of courage, you too can join their ranks and start building your real estate portfolio. However, like any investment, real estate comes with its own set of pitfalls. The allure of property ownership can sometimes blind us to the potential downsides. So, let's walk through some common mistakes you should avoid to make your real estate investment journey smoother and more profitable. One of the most common mistakes is not doing enough research. Real estate isn't a spur-of-the-moment decision. It requires careful thought and extensive research. Neglecting to investigate the market trends, property values, and potential growth can lead to making an investment that doesn't yield the desired returns. Therefore, it's crucial to dig deep, understand the market, and make informed decisions. Another pitfall to avoid is underestimating expenses. Often, first-time investors only consider the cost of purchasing the property, neglecting to factor in the ongoing costs such as maintenance, taxes, insurance, and potential vacancies. These costs can quickly add up, turning a seemingly profitable investment into a financial drain. So it's vital to calculate all potential expenses and incorporate them into your budget. Next up is not considering the location. The old saying location, location, location holds true in real estate. The location of a property can significantly impact its value and potential for growth. Investing in a property in a declining neighborhood or far from amenities could lead to lower returns. So take the time to evaluate the location and its potential for growth. Lastly, many investors make the mistake of not seeking professional advice. Real estate investment can be complex, and without the right guidance, it's easy to make costly mistakes. A real estate professional can provide valuable insights, help you navigate the market, and steer you away from potential pitfalls. Avoiding these mistakes can help ensure a smoother and more profitable investment journey. Remember, knowledge is power, and the more you know, the better decisions you can make. So do your research, consider all costs, choose the right location, and don't hesitate to seek professional advice. Your real estate investment journey is a marathon, not a sprint. So take your time, be diligent, and you'll be well on your way to success. Let's quickly recap what we've learned today. We dived into the compelling reasons why real estate is a worthy investment path. From providing a steady cash flow to its potential for appreciation, real estate stands as a tangible asset that can withstand the test of time. We then went back to basics, reminding ourselves that understanding the market, the location, and your financial capacity is vital to making sound decisions. From there, we walked through the steps of investing in real estate, from doing your research, securing financing, to making that important purchase. And let's not forget about those common pitfalls we discussed. Avoiding over-leveraging, not skipping due diligence, and steering clear of impulsive decisions are key to staying on track. So there you have it, a primer on real estate investing. Thank you for joining us on House Lux Estate. Don't forget to subscribe for more insightful content on real estate. Until next time, happy investing!